Hello, everybody. Welcome to the Build Weekly Roundup. It is week 45 of 2025. You've got myself, Cameron Otsuka, and Matt Dines here again this week to go through the three topics that we're seeing kind of most important for the week, for the last week. So, to walk through those really quickly, number one on our slate here is the New York City election result. Zohran Mamdani did win the New York City election. He is now mayor of New York City. There's been a lot of chatter on all sides, left, right, I think up, down, whatever, about whether or not this is a good thing for New York City, whether or not it signals a change of the guard as well. And I know Matt has a lot of thoughts on this one. Make sure we go through all of those. Number two, OpenAI asked the government for a backstop. When they say backstop, they were talking specifically about some help with some of the investments that they're trying to make in data centers and things like that. But they have since walked maybe some of those comments back. But I think again, Matt has some really interesting thoughts on how that might tie to some other things we've seen in history. And then finally, our third topic for this week, Bank of Japan was asked to provide policy space by Treasury Secretary Bessent. And again, I think this is kind of signaling towards a few things that maybe the U.S. and Bessent has in mind to work with Japan on. So, with all that said, I know I blasted through that pretty quickly, but Matt, do you have anything you want to add to my quick explanation there of this week's topics?
Let's get into it.
Okay, well let's go right into it. So, number one, Zoran Mamdani. Matt, maybe let me first put up the results for everybody here. We've got Zoran winning the vote, 50% of the vote over Cuomo.
Everybody is pretty well aware of this. I think it's been hashed out. Big news. It was coming. It's been clear since June. Mamdani was going to take this thing after the Cuomo attempt at even a lower office than he occupied previously. Just showed a campaign that had no support really behind it. I think what I take away this week, right? You hear the common consensus. Everybody says, "Oh, this is where the country's going. This is the precursor to midterms. Republicans watch out. Democrats going to take the House. We'll show Polymarket next. How this kind of changed where markets are showing. They see the probabilities for the big election cycle next year, congressional midterms. But here's how I read this. So you do have an upstart. Mamdani comes in, highly charismatic individual. Does he actually represent kind of policies that have broad public support, right? And I think we're risking overreacting to this one thing on Tuesday, missing the forest for the trees, that this one was kind of a shoe-in for Mamdani in the first place. Like, you're looking at Andrew Cuomo, who has no political support. Kind of the what he represents would be a 20th century New York City political dynasty. That's how Mamdani is kind of framing this. We took down a dynasty. That's true. That's how these things rise and fall in politics. And your father holds office, son holds office, gets booted out of office, and then the lineage is over at that point. Is typically how it'll go. But Andrew Cuomo, after kind of peaking in the pandemic of the heyday, February and March of 2020, he's just been person non grata ever since. So for him to just, completely faceplant and not deliver here when the legacy establishment did not want to see Mamdani, ultimately win this. What it really shows to me is, all right, focus first on the Democratic Party itself. The old guard has lost control, like they've handed over power, similar to what we saw with the Trump movement. Once he launched his campaign in 2014, he went on to take down the political dynasties. Who was the next in the Bush sequence? Jeb Bush. I mean, he just completely eviscerated that campaign when Jeb Bush was supposed to be the Republican frontrunner heading into 2016. Similar scenarios. So I think what this represents really, like if you're looking for a leading indicator, it's the old guard and the who were kind of at the helms of the Democratic, party establishment, that one half of the uniparty coalition, as some people will call it. They're losing their old guard. This is just another one kind of showing the writings on the wall. Um, you see another headline this week with Nancy Pelosi announcing her retirement, kind
So
of buried below the fold on this news. That's your signal things are changing. So the same way the Republican Party, went under new management in the 2010s, I think we're starting to see that come along. Now, is that actually going to have broad appeal across the country? That's where, get into the compare and contrast New York to the rest of the country. The rest of America does not look like New York, doesn't vote like New York either. Um, when you look at, this race, you see two candidates, Mamdani and Cuomo. They're on the left. One of them is further to the left than the other, but I don't know that either of these two candidates would do well nationwide or appeal nationwide. And the fact that it was so close, like Mamdani only beat Cuomo, which I've called maybe internally, and this is pretty harsh, but he's basically a candidate that has all the appeal of warmed up leftovers from 2020, right? No one wants this guy. There's a reason he couldn't get over the hump. And, when he started as the favorite up until June, and the campaign just, completely face planted, there's a reason for that, right? But even still, Cuomo was within flipping 1 in 20 voters of winning this thing, right? If he could just peel back, 5%, swing it over to the Cuomo camp, would have been a nail biter, photo finish horse race. So 1 in 20 is all it takes. Now, does does the New York City electorate look anything like, your congressional district in Kansas, Missouri, Iowa, like Pennsylvania? I think demographics say no, right? So if you go to the next slide, and this has been the common consensus in the kind of snap emotional reaction to the result on Tuesday, which everybody knew was coming. It's been an immediate flip to say, oh my gosh, the Republicans are in trouble of losing the House. And those odds after the New York City election result, largely, a couple other Democrats won governorship races like Virginia, New Jersey. Um, that really made Tuesday look good for the Democrats. You saw the betting platforms, right here it shows like mark to market as of our recording time, odds to win the majority control of the House in 2026, 69 to 32%, right? It's going to be above 100% just because it's a market making. You got to have the 1 cent bid ask in a tight market is the best you can do. But it's basically like 70%, yeah, or like just handicap it roughly 2-to-1 odds um, that the Democrats will win control in 2026. The Republicans will be looking at it, or the Trump administration will be looking at a second half of the term and without control of at least one of the two houses of Congress. I don't know actually if we're overreacting to that, right? And we're thinking about this like very uh, kind of just brashly, I think, right now, just given where the economy is, where financial markets are, we've got the government shutdown going on. I would say there's still a lot of game to be played for at least the first half of 2026 to see how this plays out and how things go in November. But yeah, I'd say overall interesting development. Like if you had zoomed out and asked everybody 20 years ago whether you saw this candidate winning a New York City mayoral race, everybody would say not in this universe, right? Um, but I think if you zoom out, just take that for what it is. That is surprising, I think, over the long time frame. But if you're looking at the developments on how, every week on the Roundup, we talk about the major or the headlines beneath the surface that are driving tomorrow, right? Or driving towards this outcome of where we're going in the big picture. I don't know that Tuesday was actually as high signal of a leading indicator as what it's currently being made out to be.
I think there's just been a lot of headline around it, right? People are very excited, obviously, if they're, Mamdani is their candidate. He's been kind of rallying up the younger base. But yeah, in terms of, to your point, is this actually indicative of where we're gonna go? Seems very early to have the D's kind of be dancing on the Trump administration grave, at least for
I
now.
would fade it. If it's me, I'll fade it. But it could, like, obviously things can go many different ways over the next 6 months.
Right.
All right. So let's get into the OpenAI. We say OpenAI, it's not to single out one frothy equity in the AI space because they're all in that same boat. I've talked about this on my appearance with Nick Bhatia on the Bitcoin Layer a couple of weeks ago now. The way I describe this, yes, it is a bubble, but bubbles pull, what they're actually doing is pulling forward the future into the present. Investors have to get excited about the mania to basically like leapfrog society onto a new technological way. This happens with every advance, pretty much. You can go back and look at it. Investors got hyped up and, infamously, start with Europe, the South Sea bubble, like shipping companies, all of that, the Dutch VOC, railroads in the US in the 1860s, radio and telegraph, um,
Internet cables.
internet in the 1990s. Yep. So this is just par for the course. Like this happens. But I think one of the things we've talked about on our weekly updates over the course of the year is the similarity. Sometimes you get in these situations where the bubble is actually playing a different role than what it's kind of wearing on its face. And that's where I think the best example of that is the South Sea bubble in the UK in the early 1700s. So we talked about this, what this thing was. It was essentially a just a corporate chartered public-private partnership that was on its face a trading company that would have a monopoly over like British trade from Africa to the Western Hemisphere colonies, mainly in the Caribbean, largely centered around the slave trade, sadly. But it created a speculative bubble inside of the UK, and its actual purpose was like in practice or in effect was to reduce the cost of the national debt, right? So you get the public to do this balance sheet expansion, which is ultimately going to drive up monetary creation, create liquidity, and then lower interest rates in practical effect, which is going to lower the cost of a government's debt service once it's in that type of a financial pickle.
Right.
So you kind of get this situation where the technology itself is like it's real, it's there. Humans are going to build these things to try to gain economic efficiencies in the future and pull that forward into the present. But your government, your sovereign institutions have a tendency to use these things for, what looks like a secondary end, but in practice, right? The ability of the state to perpetuate itself is the practical effect. So we've talked about this with the AI bubble. We've talked about this with the U.S. Treasury's involvement and Department of Defense's involvement with equity financing deals.
Yeah.
MP Materials, one of them, Intel. There's other ones we can go through over the course of the year. And I'm of the belief those will not be the last we'll see of those. We'll see more in the future. But We saw this week OpenAI's CFO on stage at a conference kind of said the quiet part out loud. Once you get someone up on a panel or speaking, from unprepared remarks, sometimes they'll say something that's true in the background. This is what management's discussing. This is what they're talking about behind closed doors, but they'll accidentally like drip the quiet part out loud. And maybe both sides of that transaction weren't ready for certain things to become public. But OpenAI's CFO mentioned a potential government backstop for their financing of the data centers build out that is just reaching truly massive scale in the US, but also worldwide. So everybody's going after this prize all at once. It is highly risky, right? Because the more capital you pile in early to go after like an economic benefit of uncertain or unknowable value, if it doesn't pan out the way that everybody penciled it in their financial model on Excel, someone's going to take losses. And this is where OpenAI mentioning that backstop, like it's that next step, like really locking in that clarity towards this relationship between same way South Sea Bubble Company and the Royal Crown, right?
Right.
Are you dealing with the same party? Are you not? We're still at that point where it's like, no, we're totally we're totally different. But this is totally what's going on here, and you just got that signal this week, like you heard the quiet part out loud. Now, David Sachs, the White House's chief AI czar. I don't even think that's an official title, but maybe there is some sort of documented position.
Yeah.
But it's a new seat. I think David Sachs would be the first one, but he's really representing the public sector in this entire messy process. And he came out and said, no, there's not going to be a federal government guarantee. And I don't think he could guarantee the risk financing here without. This is where we're getting into a Supreme Court case this week. What does the White House, what does the executive branch have the power to do constitutionally in terms of powers of the purse, right? That's going down to a Supreme Court decision that's going to come up on the tariffs, whether the Trump administration holds the authority to do or to make the tariff policy decisions that they've put out since Liberation Day. I think you could say the same thing about government guarantees, right? You have Treasury debt, right? The way it works, Congress approves the budget. That's kind of what the shutdown we're in right now is really all about, right? Congress has to, rubber stamp and pass a budget. Treasury spends that money once the budget has been established and set forth by Congress, and the public guarantee most explicit, like it's most clear that the government's credit guarantee applies to congressionally approved like debt spending, debt related spending, debt finance spending. The other thing, you could also have you talk about agencies, quasi public-private partnerships. GSEs would be the three-letter acronym for them, government-sponsored entities. They're not the government, but they're these entities created to do things that Congress has, given them a power to do. And like the housing sector, Fannie, Freddie, those would be examples. Yeah. So there's certain mortgages, for example, mortgage-backed securities, where Congress has given these agencies an authority to obtain credit guarantees on timely principal and interest payments, for example. You can have a government guaranteed agency, technically not a public entity, they're credit financing, and that could be what these, CapEx for the AI build out could be. So far, we're saying no, we're not going to put the public on the hook for these things. So that's the state of play where this call it the AI bubble, where it stands. I don't mean that as a bad thing though when we say a bubble. Like all investment in new productive technology starts out this way. You have to get capital markets into, like, you have to make them speculate on an unknowable future. This is just risk taking in capital markets. If you don't do it, your competition will, and then we're going to find out in 5 to 10 years whether any of this pays off. So it's kind of one of those choices, or one of those situations. Like, there is no steady ground. The only way, it's the opposite of the situation. The only way not to lose is to not play. It's like the only way not to lose here is to play at this point. It may turn out, in effect, like if all of this turns out to be garbage, then the right decision was don't play. But if it turns out the other way, this is a massively productivity enhancing technology. If you don't have it as a nation state, your
Massive
competitor will.
disadvantage.
Yeah, and then it's like going into World War II without nuclear
Yeah,
weapons
they're
or
on horses.
air superiority, and you're going to lose. So it's just one of those positions. Just gotta roll the dice on history.
Yep. And one thing that I thought was interesting with the CFO's OpenAI CFO's comments too is she walks back her comments that this kind of Market Watch headline mentions, but she never says this is wrong. She just says, "Hey, I think people focused on the wrong part of what I was talking about. Let's talk about this other stuff." So again, I think you identified this correctly, Matt, when we were talking about it the other day. I was thinking through kind of what's going on with OpenAI and broadly everything in the data center space, but it's a key technology at this point that we're definitely not gonna try to lose that race to other countries.
Yeah, and everybody's expecting, hey, the bubble's going to collapse tomorrow, all this stuff. This could last for 5, 10, 15 years, like just based on um, other similar examples of markets being caught up in these new technologies. So
Yep.
this will be a story with like for we'll be talking about this for most of the decade, in my opinion.
Well, let's move on to our third topic, our final topic of today. Bessent asked the Bank of Japan to provide policy space. So maybe can you describe what that means based off what you've read, Matt, what you've heard, and then also how that ties into kind of markets broadly.
Yeah. So this was the quiet under the scenes. Last week we talked about the Trump visit to Japan before the ASEAN or APEC. I think it was the economic summit in South Korea, between basically all of the nations around the rim of the Pacific Ocean, from Southeast Asia, Oceania, North America, South America, all the above. I don't know that Scott Bessent was there, but we caught a headline under the surface that kind of went unnoticed under the big picture, right? The big ones that got people's attention. The first stop in Japan, Trump visiting new Prime Minister Taikichi, being
The
gifted
putter.
Shinzo Abe's putter, and then going to South Korea, meeting Xi face to face. That was the 12 out of 10 we talked about last week. I don't think we got this last week in the headline, but in our discussion. But we saw a comment from Bessent urging the the new Japanese government that just formed to give its central bank, the BOJ, he called it policy space, right? And what does that mean, right? It really, what he's asking for is let the central bank do their job to fight inflation, right? And what does that mean in effect? If you go to the next chart, so CPI in Japan, just consumer price levels, they've been above the 2% target, just made up target for central bankers across the world. They've been above that for, I think it's been 41 months in a row, is what I heard. Yeah, it's been over 3 years at this point of above target inflation. And just keep in mind for context, if we zoom this chart out since the Nikkei collapsed, and the Japanese just speculative bubble of the 1980s, rolled over in the I think it was 1990 and 1991, that turnover of that year when it peaked. Um, you've been looking at a deflationary trap. They call it like the balance sheet recession, that Japan was in for 40 years. And everybody knows the situation, the demographics of Japan, et cetera. Um, we've been in this era now where inflation is running above target, which is telling you something, right? That old era is over, and this environment where BOJ policy gradually ramped up in its experimentation. When they first found themselves in this rollover in the 1990s, they tried lowering interest rates, like all the classic steps, and then they actually said, "Oh, we got to get experimental here." And this is where you actually saw the invention of QE, right? Central bank buying assets on its balance sheet. Starts with government bonds, but it expanded into like all financial assets. Like it includes equities
Yeah.
as well in their QE policy. So whatever you all think like the US did and all the memes of Ben Bernanke, Janet Yellen, Jerome Powell with the money printer, like the Japanese central bankers did that and more. It's like they're the Michael Jordans of central bank easing. But what you're seeing now is that easing, same way once the US did it, once other countries did it, the countries that, tapped that policy button the hardest in COVID in 2020 saw the inflationary effects and like materializing throughout 2021 and then peaking in 2022. And the US to rein it in had to undergo the tightening cycle that we're just now 12 months into loosening up and going through the aftermath of that process. But what I wanted to get across here, everybody in the US, you see a lot of doom posters expecting monetary policy to operate in basically the same thing we've been used to in the post 2008. I'd say the Ben Bernanke response that was copied by Janet Yellen, one for one, essentially, and then leaned into by Jerome Powell. That's just where the FOMC, the Fed, the organization was at the beginning of Powell's term. But I think a lot of the commentary right now, on X and social media, the discussion around what's going on in credit markets, what's going on in interest rates, cuts are here, we're ending QT, et cetera. We have a tendency to assume each cycle is going to look like the policy cycles of recent memory, because that's all we have, in our lived experience. But I think there's a risk that the underlying dynamics are different, right? We have a new boundary constraint, like especially from the U.S. situation, and I'll go into Japan as well. So we learned if we just do QE and we print into oblivion, and fiscal fills in a hole to try to pull the economy up, off of life support in one of those type of situations. There are new like constraints to deal with, supply chains,
I see. Yep.
dollar exchange rates, all the above. So if we just keep pressing that button, we went from not getting a certain output in the 2010s just because we were coming out of such a deflationary hole. Pushing on a string is the term that was used. If you can remember the 2009 2010 economics and finance discussion, we learn now that the string is like 2020. It's not floppy anymore. You push it, you're gonna run into the constraints, right? Because your other economic inputs, um, your supply of labor, your resource access and supply chains, those are all kind of, you're at the boundary of those. So you need to funnel investment towards pushing those things out to improve your economy's ability to deliver growth in the future. So what do I mean here? What am I getting at? Everybody's kind of posting charts of like the RRP facility being drained or something like that, thinking, oh, the QE is coming right back. When you hear Treasury Secretary Bessent make the case for the new Japanese government and the coalition to appeal to them to allow their central bank to actually fight the inflation, allow sovereign debt interest rates to rise. And this, if you look at yield curves, this is what they're doing. It's going to be okay, right? Same thing that happened in 2022. Like he's saying, like, this is the direction we actually want you to go. And in this world where you've got this new U.S. coalition being built up in real time, we talked about this. You got the U.S. now taking over the flag, like new management of, not just the country, as the country's under new management. We talked about that, but kind of the business franchise, the old Anglo-Dutch cartel, the Commonwealth, right? The British Empire, all of that. In my opinion, U.S. is now leading that economic, organization. We've taken over the flag at the front of the movement, and we're adding in business partners around that, right? So Argentina, example, Japan, clearly in the fold after what we saw in the last week or two. And what you're basically saying, if you're Scott Bessent, is like, let rates come up, it's going to be okay. And within the partnership, Japan with the U.S., led as the kind of the hub and spoke of this new supply chain network, trading infrastructure, all of that. It's actually going to allow Japan to address their inflation problem, which has now become, the flip. What used to be a deflationary collapse, now it's turning in. The market signals are, no, you're early in the process of the new regime, right?
Right.
So Bessent is saying, let interest rates come up. What that's going to do, it's going to create problems. So you got to do this slowly at first to make sure, because not everybody in markets has, no, they can't change their positions and their strategies just on a dime. It takes time for them to adjust. And if you let the Japanese yen, potentially strengthen, which would address the inflation problem, and allow interest rates to rise or bonds to sell off. Alternatively, everybody who's taken out low interest, zero interest, negative interest rate loans in the Japanese yen and used it to finance, buying other assets, you don't want to risk blowing those up as what, like we saw last August, right? Remember that yen carry trade when it started in the headlines and everybody suddenly became aware of it. What you're basically getting from Scott Bessent is like an appeal. Let your central bank fight this problem. And what this is actually going to do, you've got this stockpile of liquidity. Like, think about this from like, where is the dollar liquidity going to come from in for the next reflation? I think in my perspective, I've talked about this in the past. Ideally, it comes from reflation or releveraging of the private sector in the U.S. economy. So households, businesses, maybe, there's well-documented home affordability issues in the U.S. So young generations just can't pencil out the numbers to make a home mortgage work for them. Getting that lined up will be a big part of it for that liquidity creation that needs to happen. Ideally, the reflation and the U.S. economy and the financial system. But another piece, you've got a massive stockpile of liquidity here in the BOJ, and this is what Scott Bessent is saying: allow your central bank to fight the inflation problem. Give them the policy space, which would mean you see at this tail end the BOJ's balance sheet, which goes up to, this is in millions of yen, 100 millions of yen on the y-axis. And they're at 7 million, 100 million. So I think that comes out to like 700 trillion yen, which at about 150 yen per dollar. I think it's something in the range of about 4.75 trillion, call it, just stockpile of liquidity that could flow into just global FX. So So what would happen here, central bank, when the BOJ allows interest rates to rise, what they're going to do is essentially it's going to be a QT runoff, similar way that the US, when we were in a QT environment from March 2022 ending on December 1 of 2025, coming up, less than 30 days from now. The technical way that happens is central bank doesn't roll over maturing principal maturities and interest payments into more purchases of government bonds, which means if your fiscal policy wants to continue running deficits, the private sector has to step in. And that's where, the lowest marginal provider of capital, right, the lender of last resort, is no longer there. They're stepping back, which means interest rates are going to clear higher, right? So what does that mean? Higher interest rates in Japan means more capital is pooled into the currency itself and its short-term bond market or credit markets. And then what that will actually end up doing is strengthening the yen, which also simultaneously will increase the private sector's purchasing power to pull in imports at just improved economics. So if you think about this, higher interest rates, strengthen the yen, actually equates to more better affordability, like
Or the Japanese.
lower
Yep.
prices for the Japanese. If you think about what do the Japanese import, sort descend. Japan is an energy poor, just natural resource poor kind of island chain economy. Sizable, it's large, highly skilled population, very educated workforce, all of the above. What they don't have is natural resources. So what this is actually going to in practice do, the energy commodities that the Japanese economy needs to consume, households, businesses, etc., manufacturing inputs, raw materials, those will all get more affordable in Japanese yen terms, which will kind of balance out the recessionary or the growth slowdown dynamics of higher interest rates. What this is actually going to do in the global economy is encourage Japanese imports, which, if you look at this on a bespoke trade partner relationship, Japan to the US is the key one, focus here. Japan would be incentivized to import more, and then its exports would be less favorable with a weaker dollar. But on the net, this is also helping the US, right? Because it's lowering its own current account deficit that is causing a lot of the dynamics behind the fiscal situation, the monetary situation in the US. So what this is actually doing is two partners getting on the same page, working together.
Yep.
And Scott Bessent is saying, trust us here. It's going to be okay. We have your back. You can do the trust fall. It's a very scary thing for a central banker, or even more so for a politician, because if this doesn't work, you're looking at financial losses hitting your electorate. They're going to vote you out, all of the above. So you need some confidence to let your central bank do its thing. So what I would say, all these charts are saying, where is the liquidity going to come from in the US? A lot of it's just going to come from lower interest rates, and then the reflation that may or may not come. We don't know yet. From the private sector in the US is ideally where they want it to come from this round under the new regime, since we're out of the post GFC, 2008 to 2022 policy window, right? We're in a new era. I think the other arm of that, and this is going to be a very powerful effect that I think is not fully appreciated, is what's going to go on here in Japanese monetary policy.
Yeah, this is definitely something that I didn't fully understand, right? And when I first read that headline, I just thought that was a throwaway comment. That's just trying to be friendly to the Japanese, but you know,
It's huge.
you've actually
Yeah.
identified it's a much bigger deal than I think most people realize.
Yeah. General point, when Scott Bessent opens his mouth, examine it. You want to pay attention because most likely it was very important.
I mean, this is a little off the cuff here, but I'm curious about in your mind, how's Besant doing? I mean, it seems to me like he might be one of our better Treasury Secretaries all time.
Yeah, and this is where I want to be careful because I don't want it to sound like hero worship. Eventually, you have to kill all your own heroes. Like, that's like a Southeast Asia. That's like Sun Tzu or something like that. Confucianism, right? So I'm I don't want to look up to him in terms of this person can do no wrong because he could definitely. This is a highly risky kind of era in economic history, political history, all of the above. And it's going to really take a thread the needle to prevail, I think, for each nation state in their civilization. But I think my personal take, he's doing a very good job, and the among the entire cabinet, um, a lot of these people have reputations. They got to their seat because they were a large campaign donor, et cetera. They're part of whatever capital and political coalition is backstopping President Trump at this point. I think there's a little bit of truth to that, and you can see it. Who's actually a groveler? Um, get over that. I think Scott Bessent has been doing like if I had to grade it, I'd be like A plus for just one degree of difficulty, but then two just strategic positioning. And I think so many people are missing that. It's hard to see the forest for the trees, and I think a lot of people go through this wearing their own whatever tint of glasses you have, like uh, rose-colored glasses if you think Trump and the administration can do no wrong, or whatever would be the opposite of that, where everything these people do is a complete chaos show. They're terrible grifters running the country, et cetera. I try to step back and not get too emotionally involved in grading this and try to like just understand what certain individuals are trying to accomplish, what motivates them, um, and how they're looking to position the country for like what we hand off into the next era of history, right? And I think this last 10 years we've been living in is becoming more and more pressing. We're working towards like that transition from whatever we were doing to whatever comes next. I think Scott Bessent has done a really good job in like 10 months is how I would grade this. Now he's got 3 more years, hopefully. Um, the thing about it, it's a marathon, not a sprint, but I think he's doing a very good job. And there's only a couple other Treasury secretaries who've been really outstanding. There's been a lot of dirt poor, in my opinion. Um, the worst among them were, I think, the Civil War era. But that's just my personal opinion. But yeah, there's only been a couple of goats. Alexander Hamilton would be the one everybody would cite. Number two would be Andrew Mellon. But I think he'll put his name up there once this is all said and done. Or he's on the course for that. It's like Patrick Mahomes,
Right.
3 Super Bowls in his first 8 years. There's a whole second half of a career to go. We'll see how it goes. Already in the Hall of Fame. Everything after that is just kind of milk. And I think with what Bessent has already done, it's close to that. It'd be like Mahomes already won 1 Super Bowl, probably just about to win two. Like, all right, he's very close to already in the Hall of Fame in my book, on a short list. And then where he goes down, it depends how all this plays out.
Right.
This whole thing is volatile. So we're talking about everything. Um, the big picture we're trying to capture here for the audience every week. But yeah, he's the actual leader here, in my opinion. Um,
Well, with that, I think that's a good spot to end this week's episode. I mean, I know I asked you that off the cuff there, but I wanted to probe your opinion there a little bit. So as always, everybody, thank you for watching this week's Build Weekly Roundup. If you have not yet, please subscribe to our YouTube, to our X. It's Build Markets for both of those. You can always find myself and Matt on Twitter, or X, as is now called. Matt's handle is levered USTs. Mine is my name. Thank you, everybody.
Well, the last thing about Scott Bessent we did not talk about. He posted a tweet late Friday about Bitcoin.
Oh yeah.
Go back and look at that. But that's a nice little Easter egg. I think not a lot of people caught unless you're a Bitcoin kind of proponent following. But there's definitely signal there. I know it doesn't look like it with Bitcoin. Bitcoin is in drawdown. That's just where it's going to be for the going, future until course changes and the cycle flips. But Scott Bessent gave you a nice little Easter egg there last Friday for where things may be going 1, 2, 3 years from now. So with that, we'll sign off. We'll see you next week.
Thank you.